Hey traders, what's going on? Jamie Saettele here. It is September 16th, 2015, 1 o'clock Eastern. And let's get started with the midweek strategy webinar. So, a few things. Before I get into the markets, I kind of want to just talk a bit about what I'm doing with the swing updates and the levels. So I used to put those levels out, right? And put them out on Sunday. Well, now I'm kind of keeping them front and center. I think it's actually a lot more useful um, to keep them there every day. And then the ones that are bold, so the bold levels are basically kind of in play, if you will, for that day, right? So, yesterday this is posted I think around 6 o'clock New York time, and the bold levels 112, 11, 17, 112, 34, 54. Those are levels that you basically, you'd be looking for support, right? So that's kind of the way it works. 97.55, you'd be looking for resistance in dollar Swiss, right? So, today's low, for example, in euro, I think is actually right at 112.13. So it's like right in there. The low in pound is right near 53.20. Low in 12.13, low in pound 53.29. Monthly open 53.42. That's kind of where those levels come from. These levels might be, they could be based on slope, they could be based on horizontal, they could be based on volume, they could be based on fibs, based on whatever. They're just, they're there. So that's kind of, I think it'd be a little more useful. I find it useful because I have them in front of me all the time, obviously, but this might even be more useful for me because I'm going over them a little more each day and having them bold, right, to watch for that day. So, all right, there's just a quick little thing there on the levels. All right, so let's get to the markets. Obviously, tomorrow there's something called FOMC. And, yeah, it's a big day. I get it. Probably the most overhyped freaking Fed meeting, um, the most overhyped Fed meeting in the history of Fed meetings. Hey, Gary, what's up? Gary New. Hey, welcome. So Gary's asking where is that? Okay, so when you come to the web page, so you log in, and if you go to long-term charts here, you see daily swing updates. Okay, and the swing updates, you can see all of it. Those are published every day. All the recent articles will be published here, so you can find it there too. But the swing updates is where you'll find these levels, charts, trades. In other words, the orders, watch list, what I'm watching for, what I would suggest trading, if you will, what levels to look for range, short, long, etc. Charts with comments and stuff like that. So like this is an example of yesterday's euro pound chart. And we'll talk about that here in a moment. All right, so again, FOMC tomorrow. Everyone's all jacked up for what the Fed will or will not do. Reading into what's happening in price action into the meetings kind of silly in my opinion. I mean, gold is acting interesting because FOMC or no FOMC, it has come into and reacted at a level that we would expect it to react at, right? I mean, we had in the long-term page, we wrote it several weeks ago actually, and it was gold. Looking at week of 9/6, do you realize that the recent high is right at the lower pillar from the bullish structure that uses the 1999 high and 2001 low? This is a long-term example of using the original slope, okay? And what I mean by that is scrolling back in the original slope from the original bull market that began back in the very late 90s, and in the early 2000s. That slope, believe it or not, actually was resistance for a while, but that slope was support, support, support. It was support after the financial crisis in 2008 in October, and guess what? It was just support again, just basically a couple months ago in July. So that, and we also have it's also the same slope as the trend line from the 2006 and 2010 lows, basically the same line, just going back further, and now you know where it originates from. In any case, we wrote that gold could have made a huge low, although the sliding parallel to the 2005 low is still in play as supportive reach. That would be down near $1,000. That's this line right here. The daily remains bearish. Beware of volume levels as possible supports at 1096 and 1099. Guess what last week's low was? It was 1099. Okay, so gold's already acting, in a manner that we would kind of expect it to, FOMC or no FOMC. Okay, the market's responding to levels that we'd expect it to respond to. Now, look, in order to suggest that this is the first leg of a big bull, this is the second leg of a down of a bear, or sorry, of a bull. So A, B, C. It's a good start to what could be a larger rally, right? And a break above this resistance, which is probably about $11.50 at this point, $30. It's really not that far. I mean, $30 move in gold is a big move, but given the pent up emotion and everything else going on in the marketplace right now, $30 move in gold is not that far. So break above here really sets the stage for something significant on the upside, and probably would be looking at your next big swing level on the upside all the way up. I would guess probably near 1250, 1260. Okay, and that's looking way out, so that could be months in the making. But look, the gold is a very technically clean market, and it has been for a long time, and that's because there really are no fundamentals in gold. Think about it. There are no fundamentals in gold. Okay, gold is the most pure supply-demand market there is. And so that's why studying it from a technical basis is very clean, and that's why you get very clean slopes on gold, long-term, short-term, medium-term, whatever. You get clean patterns on gold, okay? You're not going to see gold, people say it's people make the case for gold as inflation this, inflation that, buy it if it's this, sell if it's that. It's all bull, okay? Gold is the most pure supply-demand market there is, and studying it technically works very well. So a break above this would be a big deal. And obviously with the long-term correlations in play, especially with some specific dollar pairs, notably Aussie dollar, that would give credence to a bigger bullish view on Aussie and bearish view on the dollar. So that's how we're going to start our FOMC, pre-FOMC look at the markets here by looking at gold as we just did. Let's look at some of the dollar indexes right now too. So 2 midweek webinars ago, I showed this exact chart, and it was another example of original slope. This was the US dollar index. This is the ICE index, right? This is the one traded in the futures market, right? So ICE dollar index. And you can see that the median line at that point was kind of interest. In fact, I think that Wednesday was actually, or I did that video on the Thursday, or that webinar on a Thursday, 2 Thursdays ago. So not quite 2 weeks ago. And it was actually this day right here, and we had this arrow here. Well, we did trade down from there, came up, and then we traded into the same level again. So we could add another little arrow over here if we wish. And yeah. All right, so turn down again, and now we're turning down at the median line here, okay, as well as the underside of this lower parallel, which again was support way back. This goes way back, the early stages of the bull from 2014. So viewed in this context, the US dollar does look like it's in a vulnerable position in the short term. Okay, Um, Big picture, looking at a weekly chart, really what you'd need to see, I think, is probably, this big breakout that did occur. The median line here is your natural kind of attraction point as far as a retest is concerned. Retest of this area, retest of former highs in 2010 and 2009, and that's a long way down. So if we're at the beginning of that, then there'll be quite some moves lower, in the dollar over the coming months. All right, but we can't really work like that up from a trading standpoint. Obviously, we can kind of work with the idea that the dollar's due to decline because there's support that's really far away, but you don't know if that's going to happen or not. You got to ask the question where you're wrong, and at this point you're wrong up here, okay, which is the 9/3 high, the September high in the dollar index. Okay, so as that translates to say something like the euro, which this index is close to the euro, it's like 57%. As this translates to the euro, we got the same structure we're working with, obviously, and I'm still, I think the move is to buy dips still, right? I mean, this morning we came in and I pointed out that we were at support. I did not expect to see that big of a reaction to CPI. We are long euro, but against the pound right now. Euro pounds is 73, so we're at 72.90. So whatever, we'll get to that. But the euro dollar itself, looking higher as we head into tomorrow. I would be watching for, say, here's your hourly chart, right? This is the same slope on the euro. Same one, sliding parallel, which is where we get the support at today. I'd be looking at support probably near 1250 or so. Look at a 5-minute and see. This night has got a nice looking impulse kind of on the upside here. So we'd be looking for support, say around 1240, 1250. I don't know. Let's see what a fib would do here, just of this move from this morning's low. Well, they happen to be, the 61.8 actually happens to be 112.55. So, and Dale, right on cue, Dale's got a great question. He says, are some fib levels more important to you than others? Absolutely. So the 61.8 is the most important one, because that's really the, that is what everything's based on, right? Now, 50% is not actually a fib. 50% is just the middle point. Okay, the two fib levels are 38.2, the two big ones are 38.2 and 61.8. I don't actually look at 38.2 all that often. So Dale, 61.8 is the big one for me. And, I look at 50 more as a point of reference than anything, right? I mean, they're all points of reference, but, 50 is, I look at more as a, kind of a, it just makes me comfortable. Just kind of want to know like where the middle point is of the range that we're looking at. That's, kind of it. So 61.8 in this case, and this is, we're an hour away from where we just peaked out at 1321. But let's say that we pull back here, and get a pullback into FOMC, or we go sideways FOMC, and then you get, a spike down FOMC. Be watching for maybe 1255 support, which again does happen to be, and by the way, that would be FOMC comes in like right around here, so you do have an intersection there with 1255. 1255 is the low here from Friday, actually, right? Which remember I was pointing out at the time, we had a median line there. It was a shorter term one. Remember, I got rid of it because it's so short term that I don't really have any use for it right now. But that's the one we were looking at, right there. Okay, so that was Friday, and then we pointed out resistance up here too. was more like right here. Market has finally come off, but came off, rebounded. So yeah, 1255 support, and that's the fib, and it's also again daily low from Friday, which is nice. So 1255, we'll watch for that. Okay, so I kind of mark that down as 1255 for euro as a big spot. And if we get something there, that might be a really good spot to trade euro on the long side for. To me, I think that still this is the daily, so I think that the biggest level for euro is probably 114.60s, 114.75, and there's the 61.8 again. We just talked about the most important fib, right? So 618 of the decline from August 24th high, those kind of reverse panic high, if you will, um, is 1475, and then of course you've got the high from May at 1467, 1468, something like that. So that's the big spot for me. I would consider, this is a range environment, okay, that we're in. We have kind of talked about this for a time. Over the last couple weeks, I guess. But remember, this is that analog, the 97, 98 one, and don't forget about it because, it does seem to be playing out fairly well. If that, we were kind of this morning at the precipice of a bigger change. If that support at 12.11, hadn't held, low was 12.13, but that was kind of like the 12.12 was kind of like the total invalidation for a euro, bullish case in the near term, right? And if we had not held that, we started to break down, then we would have had some real problems with euro. On the long side, we probably would have been, this is still possible. We definitely would have been in this environment, right? We don't want that. That sucks. It'd be a real chop fest. So, I hope this doesn't happen, but we're keeping our, possibilities open. But bottom line, euro dollar 12.55 is the spot now, and would be targeting 14.75, 14.65 or so, that area up here by the end of the week, maybe early next week. And maybe hold on to some if you get the setup in order to see if you can catch a bigger move. But again, this is still a range, so don't get married to a position really on either side at this point. This was the breakout attempt up here. It did fail on the first attempt. It's not like it's in the middle of nowhere. Oops. It was this median line, okay? And something else that I did notice the other day, so we have, for people look at a 55 moving average on various time frames, and if for no other reason, they kind of like, again, give you an idea of what kind of market you're in. If you're downsloping moving average, obviously a bearish position, but look what remember the area we're comparing with 2000 with 1997, 98. Remember, this is the area we're looking at, right, from the low. Saying we could be like something around here, maybe. If that's the case, it does make some sense because look at where the 55-week average was back on that initial rip, that initial failure back in 1997 in November was actually right at the 55-week. Okay. And then that's exactly what happened right here. Okay, that's exactly what happened 3 weeks ago. Okay. So that's something that adds to it. The 200 week, which I've never really understood why people look at 200 weeks, but I will note that this period we're following, the 200 week, was actually pretty precise for resistance, right? So eventually, at some point, but this could be many, many months off, 200 week average could be in play as resistance somewhere in the, 120 somewhere, 125, I don't know. But just kind of point that out too. It's interesting to note. All right, so we'll move on there. But, as it is heading into tomorrow, 112.55 for euro is going to be really big. And hold on. 112.55 for euro is going to be big support, in my opinion. All right. Why don't we just move to some other euro crosses? So here's euro yen. It just tweeted out that we were at resistance. Sohaib, yeah, I see your question. Let me, I'll get to it. Asking about volumes, no problem. So this is euro yen. We're at resistance here. Okay, same resistance that we were at, I guess Friday, or sorry, Monday, Sunday night, Monday. We were right here. Okay, same place, same resistance. So would start looking lower in euro yen at this point, and you might say, well, that's weird. If you are looking higher in euro pound and lower in euro yen, then why don't you just trade pound yen? Well, you could, but I mean, you could also be wrong on one of these. So, you don't know if euro yen is going to blast through here or not. Really the trade for euro yen, and this goes for any pitchfork trade, if you will, the setup, really once you hit the median line like you did here, the setup is you want to sell the touch of the upper parallel, okay? And, pull back here, that we've had topping processes at the last number of turns really in euro yen. I mean, they haven't been, it's not like it's gone, into the high and then fallen right off. It's gone into the high and then kind of fooled around, chopped around, what have you. So euro yen, I'd be looking lower just based on this alone. Pound yen is its own thing, and pound yen, you could be looking lower in pound yen starting basically right now. I remember we talked about the 50, trading the 50s, right? So all right, you can kind of see the 50 line. So the 50 line is just when you get the midpoint between the median line and the lower parallel, okay? Obviously the 50 line was support down here at the low on the 7th. I'm looking for a little better resistance in pound yen, a little closer to 188, and have been looking there for basically a week now, waiting for 188, and we've had this kind of, again, this chop fest, if you will, leading up into the FOMC rate decision, but 188 is a really big area for pound yen, okay? Pound yen, 187.75 is a 50% move down from the August high, okay? 188.10, daily high from 826. You've got the sliding parallel that extends off of the gap, and this is a method I've talked about, that has helped identify a number of important turns in crosses this year, notably in yen crosses, because we've had some gaps in yen crosses, of course. The big one being probably the biggest one being early in the year. In January, we had some gaps. Euro yen in particular, we had a big one. And that was actually came into play just recently. So, I can go back and show that in a minute here. But pound yen has basically hit resistance from the 50 today. Tomorrow, you've got like 187.50 is this level. So I don't know if we're going to get to 188 at this point. The one reason I was, looking for 188 too is that we had, this goes way back. This is a really long-term parallel, but we had former support that had been resistance on the breakdown into, late August, early September. That same line came in as a confluence, but if that would have already happened. Raj saying stops will have to be huge, right? If shorting at 188. Yeah, well, again, Raj, if you wanted to just put an order to short at 188, yeah, you'd probably have to have a pretty big stop. The other option, of course, would be to wait to see what the market does at 188, and if it trades up there and then turns around, you can go short with a stop above whatever that day's high is. Okay, so there's different ways to go about it. Obviously, if you put an order to just short at 188 or whatever, and you have a huge stop, you kind of have to use like no leverage, or not even go 1-to-1. Depending on what your risk, how much you want to risk, really, right? So that's what we'd be looking at there. All right, I want to take a real quick moment here. So Sohaib was asking about volume, and volume. So the volume I look at futures volume. Okay, and I can't tell you, in order to get this, you'd have to have a data feed that's going to give you the futures market stuff. So that's what I'm looking at as far as futures volume. Like, for example, the volume levels on here, the last one, obviously August 24th, huge volume. The close that day would be an important day for me. August 24th is basically going to be everything right now, because you can see here August 24th in Japanese yen, right? I mean, everything's going to be August 24th. That was just a crazy day, just the way it was. Now you can get FX spot volume or through FXCM, okay, by using MarketScope, their charting package, and they have indicators that they provide that have the volume there for you to look at, okay. And I think it's actually a default indicator. So you can just pull it up and you'll have that. But this is what I look like, or what I look at. And a lot of times I will pull, when I have the charts, I'm looking at the charts with the volume on them. A lot of times I will have a red line, where the big resistance is. The big volume level is, I should say. So, for example, let's see if I have that right. It's like whenever you see a big, so like this is, for example, euro dollar. So I have a red line here. Okay, that means that's the volume area, 115.77. So, when there's a big volume level coming up, I try to indicate it, notify that on the chart, right? We had it with gold. Gold, the big volume area was 1096 to 1098, and I had those on the charts, 1096 to 1098, right? So hey, I put those on the chart too, so that you understand where those might be, where that volume is, right? So you don't have to look through it. You can just kind of see it real quickly. All right. Okay, so kind of went through pound yen. I love pound yen. Some of these other pairs, obviously, really lining up for some interesting action. Like pound, we've been looking at them forever, but pound CAD, is one that again is setting up for something big. We came into, this was the same chart from last night, talking about support. Basically kind of where we were yesterday at the close of New York, 203. It did dip down to what, 202.62. For pound CAD, that's really not that big of a move. 40 pips in pound CAD is not a big move. You got to think, you're talking about, something that has a very large ATR CAD pips. So like, 75 cents on the dollar, and still looking for that 206-ish area. And again, that's just such a big attraction level, right? There's areas in the market, no matter what it is, no matter what the market is, that really stick out. And it's a, best described, I think, as an attraction area, and it's where you're looking for the market to trade to, right? So in this case, kind of still have this short-term, bullish slope to work with, if you will, and we do have 206.13 as the 618 retracement, happens to be the same level as the high in August, early August, and that those two levels really form a very strong attraction level, right? And so the idea here is to kind of just sit on your hands and not do anything and wait until we get to that level and then look to short it. Okay, now look, I get it, that's 200 pips away. So Jamie, if it's 200 pips away, why don't I just go long? Well, you can if you want. At least you have a very clean level to trade against now. I almost put an order in at 203 yesterday, and the stop would have been down here. It would have been working out, although you'd have to suffer a little bit of pain. Okay, but at this point, you could do just that. You could look for support, basically probably around 203.50 with a stop at 202.50, and look to take it higher into 206.10, 206.30. And that's a viable option. It might be actually a decent idea, to be quite honest with you, because you kind of would, take out some of your risk on, on euro pound. All right. So that's pound CAD. But for me, in my trade, and what I'm doing with the swing is I want to short it at 206.30. All right. Tough to be patient. I know that is like the hardest thing in trading, but that's what I'm looking to do. Okay. And again, you ask why, and we've been covering this chart or this cross for what, I don't know, 3-4 weeks. And remember, we had this giant weekly reversal up here. And a lot of times this is what the beginning of a bigger turn looks like, right? And so even within the context of this very large, bull run that we've had, okay, not just over the last few years, but really since April and May, we've run into levels that, have been yearly lows, have been yearly highs, have led to really strong moves in the other direction, right? And so 206.10, 206.30, that resistance we're looking for, even a modest pullback within this gets you 198. Okay. So we're talking about 800 pips, again, CAD pips, but what's that? It's 600 pips and dollar pips basically. So you'd be looking, that's a big move, right? Take that any day of the week. The kind of stuff that kind of make or break you as a trader over the long term. So staying focused with this pound CAD idea, looking for that 206.1030 to take it lower. All right. And again, the same story with these CAD crosses. We're looking for the CAD, to turn over, and maybe it's doing it now. I don't know. I'm still thinking that we could be in this triangle, if you will, and get one final push. And here was my cool drawing that I had last week here with little, right? Hasn't really worked out that way so far. Maybe it's trying to break down. I don't know, but one more push to the upside and then a big rollover. Kind of what I'm thinking. If this starts to break down a little bit, there is another option in which you get basically an A, B, C, and get a low down here. Okay, on somewhere on this parallel, and then maybe get a high later on in late September, early October. Okay, I wouldn't be real. I'd have to see some good action down here to get long dollar CAD, because with everything I've been talking about with the risk of a kind of a dollar sharp decline, right? I wouldn't want to be going against that. If the market got down into here, it'd probably feel extremely scary. That's why also I be much rather be trading something like pound CAD, which has a very clean topping pattern, head and shoulder setup, if you will. Be looking to trade that much more so than something like the dollar CAD. All right, let's take a look at Euro CAD. Raj was asking about Euro CAD. So hey, we will look at dollar Swiss as well. I'll take a peek there in a minute. I did see your question. Okay, so Euro CAD. Let's see. Okay. All right. Okay, so EuroCAD, again, scrolling way out here, okay, this is the fork that goes back to April and really has been kind of the defining structure, if you will, right, for the moves up and down, for that matter, since that time. And, you know, kind of noticing that we had topped here on EuroCAD, you know, a few days ago, I guess it was Friday actually, where we topped out a bit. And just looking at when the market within this rally had topped at this area right before, you'd notice that we found support. Again, more nice drawings, right? We'd found support kind of again at near the 50 line, if you will, maybe a little bit below at times, but not far from it. So noting that in this case, that would put us kind of near, you know, I think we had something like 48.65 or something, and then even maybe 48 as the levels to watch for a low in EuroCAD. And so far it seems to have played out, right? We did get a little bit below 65. We got 48.45. Market popped off of that, popped all the way up into actually 49.45. So you got a 100 pip bounce off that low. You know, I still like the upside. You know, again, say I tweeted this out yesterday. I like it higher, up into 150, 190. Yeah, Mark, this is definitely archived. I'll have this archived. But you know, I like this higher, EuroCAD higher into 150, 190. And just like pound CAD, we talked about the attraction level, right, with 206.10, 206.30. Being the 61.8 as well as the former high. Same thing with EuroCAD. Okay, it's an attraction level. It's, you know, it's the fib 5190. It's also a big volume level, right? And you hear me talk about, discuss, whatever, daily reversal levels. A lot of times, those daily reversal levels, they're more important, obviously, sometimes on an intraday chart because you get 240-minute charts and you can kind of see, you know, kind of zoom in on when, you know, specifically when that happens. So if you remember on August 24th, the most important part of that day was probably around, you know, the 9 o'clock, you know, bar, right? Right when things really started hitting the fan. And in this case, we had that happen here, and then we get that quick reversal, and that happened right here. So that closes 152.12, right? Raj asking me about EuroCAD. Am I long personally? I'm long some EuroCAD. I actually never got out of EuroCAD. So I'm long EuroCAD. Remember, I trailed that stop on the swing updates to 49.70. I actually never got out, so I'm still long. So it's actually the exit at 49.70 would have actually been a better exit than what I'm doing. I'm still long on this, looking at 51.90 for EuroCAD. Okay, but then I'd want to short the hell out of it. So you've got 51.90, and it's not just the horizontal levels or the fib. You've got it'd be great if we got up there and you had into the median line. If that were to occur, this wouldn't be until like next week though. So, you know, we'll see. But yeah, EuroCAD at support, you know, holding up. Let's see what the momentum picture looks like in this EuroCAD. Actually, EuroCAD. This is pound dollar I was looking at before. Raj says Aussie CAD didn't play out. Oh well. Yep. Oh well. It could present itself another opportunity down the road. You never know. All right. So here's EuroCAD. Look at it in this context. You've got looking like it wants to pop again. Remember we had that kind of inverse head and shoulders? It's making what looks like an even bigger one. I don't know. Maybe EuroCAD gets real bold up. I don't know. In fact, that reminds me, I'm getting all over the place at this point, but this is, you see the 4-hour RSI? See how it's bouncing basically between, so like your 4-hour RSI, this is real bullish RSI, right? Above 70, holds 40, holds 40. This is, kind of sideways, but holding 40. So it's sideways within the context of a bullish RSI. Same thing we've got here. Look at this sideways, right? Resistance, 60, 40 support, resistance near 60 support, whatever. You've got this kind of sideways RSI between 60 and 40, but within the context of a very overbought signal, which is actually bullish, right? That's why I hate the terms overbought and oversold. Because they typically precede bigger moves on the upside, right? So it's very difficult to be short this market unless you get a really good entry and get, a pull off of a big level like 152 or whatever. That's why I'm saying that until this thing either trades up into 52 and shows signs of failure, or until it starts to break down, I'm not willing to just be short to be short. I don't care what the big picture, what I think is happening, right? You got to see it on the short term. You got to see the pattern on the short term, and we're still within bullish confines on these momentum, whether it's 240 or even daily charts. All right. Finally, with EuroCAD, and then we'll move on. And again, why am I paying so much attention to CAD crosses? I've written it a lot, but the reason is because I think, CAD's coiled up, and there's going to be some really big moves coming up in CAD. I'm not sure if we get the final push to new highs in these CAD crosses, and then CAD rallies big time, and which would mean you get, CAD crosses tanking, specifically dollar CAD, pound CAD, Euro CAD, whatever. And this is all due to obviously the picture that we've got going on in oil, right? We've covered that a lot, and we'll look at a quick chart here in a moment. But this EuroCAD, though, if I look at, I'll show you one more thing here, EuroCAD. So let's say that we do end up getting a much bigger than expected rally. Here is like the longest term chart you'll ever see in EuroCAD. There's a trend line that goes back to the 1995 and 2008 highs in EuroCAD. And that trend line comes in like near 160. Okay. So that's, I'm not saying it's going there. I don't know if it's going there, right? My thinking is that what happened on August 24th marks a bigger reversal, which is why I want to sell it at 152 or near there. But look, you've got to be, aware of everything, okay, going on with what you're trading, in my opinion. So in the event that there is a surprise move much higher than anticipated, then just know that around 160, there's like a really, really long-term trend line. In fact, it's a 20-year trend line. Okay, so I would just be aware of that. Alrighty. A few more questions we've got here. Dale asking, with the EuroCAD trade, where would you put a stop on it? So my stop is actually down here at 147.50, which is, remember, this is the area we bought it the first time, which was 147.62 was the entry, and put that stop at 147.62 at break even, whatever, but I just never really took it off. So I still have it at 147.60. Yeah, and then asking if it gets the, well, this is no longer this blue guy because we've already started to turn up here. So it might be that we just head higher from here now, right? The idea was this was a confluence between basically the short-term, really short-term form of resistance breakout line, and that if we were going to get there, you would kind of wanted to see it happen by this morning. So it didn't happen. Okay, but we are holding up at, levels that you'd expect to hold up at, generally speaking, right? Supports kind of along this plane. Okay. All right, so we've looked at a good amount of things here, really looking at, focusing in on that CAD stuff, honing in on that pound CAD, that Euro CAD. Looked at pound yen, we looked at Euro yen, Euro dollar. Let's get into pound dollar a little bit. Okay. Pound dollar. Here's the S&P. Look at the S&P too. S&P 500. Just look at that thing. This thing is, let me tell you what the S&P 500 does. It's going to take out every single possible stop it can before FOMC. Here's the structure. We just broke resistance here. You got short-term, support here. You remember the magenta line published this the day that all this crazy stuff happened? Well, guess what? We still haven't broken that line. In fact, I was getting emails from people. In fact, some were subscribers and telling me that I was more or less going to miss the big decline in equities because, there was obviously this was going to break, and obviously the market's, going to break and go into this huge bear market. Well, if you were selling down here, you probably broke by now. So always good to stick to the plan of selling resistance and buying support. So on that note, FOMC, the next level of area of interest is really kind of this median line, to be honest. And I think I wrote that yesterday, but median line sliding parallel up near the, 20, it's tomorrow, 18th, 17th. It's up here. So it's like 2018 to 2025 or something, right? So that's if we get up there. That'd be a really genius area to sell it if you were to get up into here tomorrow. No, it's pretty good looking too, although that would suggest higher prices. Oh well. All right, so there's your S&P. Where was I? I was gonna look at pound. So again, want to be short for a big move. We did trade into the former support today. I think I said it was like 54 or 55.15 today, right? We got up to 55.28 today, but talked about the correction unfolding and whatnot in cable, and this looks to be like that correction, right? So kind of thinking A, B. Hold on, what the hell's wrong with this thing? All right, so kind of thinking A, B, C, which puts us so A, B, a 618 extension of this. First of all, 2 equal legs is 56.42. I don't know if we get all the way up there. there's the 618, in other words, where C equals A, or C equals 61.8% of A, would be about 50 something or 55.60, which actually is also the 61.8 retracement of this rally. Okay, so, or this decline, I mean. So, and then of course you got the year open at 55.78. So there's a lot of stuff going on in that 55.60s, 55, 75.80 area. But again, when do we get there? I don't know. We could trade back and forth. You get this A wave, B wave, whatever. We could pull back sharply and then rally higher. I mean, cable's known for its difficulty, especially in its corrective moves, right? Cable's either moving in a correction every which way, or it's straight lining, trending, whatever, right? Some pairs have fairly clean corrections. You can kind of count them. For pound dollar, it's kind of silly in my opinion to try to count the correction itself. Rather just wait until it plays out. And then I'd like to say if you can count it, it's probably done. So once it's very clear and you can count it without forcing anything on it, then you kind of say, okay, this is great, and you look to take a position. So what's that mean for the euro pound trade? I don't know. I hate looking at it like that, because euro pound, which we'll look at right now, real quick here. Here's pound dollar. Okay, here's pound dollar. 200 average down here, 55 up here. So here's that year open, 55.78. All this stuff is basically, there's like a lot of resistance from that area, but from a slope perspective, the best place for that to happen to top really isn't for like another, week or so, right? So maybe things get really sloppy over the next, period of 5 trading days. Okay. Look at euro pound real quickly here. Andrew Smith asking you think it's okay to tighten stops on euro pound? So what I'll do is I'll wait until the end of the day before I decide to do something like that typically. And let's talk about that euro pound trade right now. So again, looked at pound dollar. We think it could maybe stretch a little higher, but I don't know how it gets there. If it gets there, it could be really choppy. That means you pull back, you go higher, et cetera, et cetera. The other part of the equation, of course, is euro dollar itself. And what's that going to do? If euro dollar, finds that 1250 support, pulls back into there, but then rallies in a very strong manner, then euro pound might work out all right. So this was the chart that I had up for euro pound yesterday, right? We did dip a little bit, but I was kind of thinking we'd find real good support at 72.90. So this dip was a little more than I expected, but I still like the idea of a long. I'm just not too sure about the slope. And there's several things that I talk about when it comes to what slopes, which slope to look at, right? One of them is that typically the steeper the slope, the less likely it is, again, to remain valid for an extended period of time. Okay. And in this case, this is a big picture one. So that we could be with this one for a really long time, this really big one. Okay. This is the one we just had. Again, right? This one. Okay. And we had the sliding parallel off of here. But what I'm looking at now, what I think might be better is actually something like this. Okay. And if you take the sliding parallel, or take a parallel and slide it off of here, you actually get very precise touch points on and you could have support that comes in a little later Okay, so when it comes to this euro pound trade, yeah, I kind of do want to tighten stops, but I'm probably not going to do it till the end of the day, and I'll put it out in the swing update. And if I do, I'll probably just move the stop to below today's low, so it'll be like 72.65 or something. Um, because again, if that doesn't hold, then the slope that we previously had is obviously not valid anymore, and you're going lower. And if we do hold, okay, then that keeps the uptrend against this, I guess you'd call this an original, um, you know, line, okay? And we'd probably be looking towards, the 75, 74.90 area. Just in general, generally speaking, the consolidation from the 24th, right? Again, is that taking on a triangle? Could be. Okay, whatever it is, it's sideways. And the implication is bullish within the context of not just the previous rally, okay, but also the rally from consolidation, this kind of rounding bottom we've got going on. I'll give you a little wave count here for euro pound. Okay, 1, 2, then 1, 2, 3, 4, 5. Okay, 4, 5. And you say, well, how is that this 3 and like this isn't 3? Well, wave 3 itself needs to have 5 waves up, right? 1, 2, 3, 4, 5. So wave 3 needs to have 5 waves up, and it does. And it's okay that it doesn't go above this. Again, that's called truncation, but I wouldn't pay a big attention to it because that was a crazy spike day. Looking at it like obviously you can see how clear it is when you look at it on on a closing basis, right? And 1, 2, 3, 4. 4 this could end up being a triangle, a flat, whatever. We could end up, you could get stopped out and get support down here, okay, and still be right to be bullish, but not make money. Okay, so the point is we're looking for a rally in a fifth wave. We're taking a shot at it because it's not just support on a slope basis. It was also support at daily reversal support 72.87. The month open 73.05. Would obviously like to see a close above there today, but whatever. If we look at the big picture, the weekly chart, just looking out, I think it's pretty clear. The first big test here, obviously, is the May high at 74.82. You got this long-term trend line a little higher, up near 75, 75.20, 75.30 over the next number of weeks. So big area up there, and that's where I'd be looking to get out. I would think it's probably unlikely that this thing breaks, the trend line on this attempt, right? Probably get a pullback from here as part of the larger bottoming process. So rally, pullback, right? Raj, S&P. I spent a lot of time on the S&P. We were looking at the S&P. Is right here, right? So I was saying the S&P probably get 2018, 2025 area is the big resistance if you get that on FOMC. Okay. So there we have the S&P 500. I do want to take one quick look at the FXCM dollar index 60-minute chart. So we've come off, right? This is the slope to look at, in my opinion, right now for the dollar index, actually at downtrend support. And I'd be looking to this vertical line. The vertical line is where time, okay, this is where you get FOMC tomorrow. So it's the hour of FOMC. And interestingly enough, the former highs up here from from this week. Okay, well, that's Friday, and then this is the high that we had on, I guess, yesterday. So those two highs, not far from the low over here, actually intersect the upper parallel of this slope right during FOMC. Now, the median line, which is also a level to know for potential resistance, it was resistance on the 15th yesterday. That's a little lower. It's like 11,990 or so, around there, which isn't far from, again, last Thursday's low. Okay, and then we had highs here on Monday. So two levels to sell dollars into on FOMC. So I don't know what dollar is going to do here. It could fall apart. I'm just saying be aware that if the dollar does rally from this level, which wouldn't be that big of a surprise given that we do have the presence of downtrend support, the trade, in my opinion, is to sell it, but sell it at the right place. So that would be about, again, 11,990s or just around 12. So that would be the latter level up here would probably be a pretty good setup because you get, I'm sure you'd get a lot of people getting excited about a dollar breakout to the upside if we were to trade up there above these highs or into these highs, and it would probably be just the worst time, stop, trip, and then sell it and then falls apart. But just kind of following that for the dollar index here in the short term. Did have a question I wanted to get to earlier and totally forgot about it, and that's Sohaib, dollar Swiss. My apologies, my friend. Dollar Swiss. Okay, so this is same stuff from the long-term page. Really no change here for me. I'm thinking that we're in a triangle and have been from the March high. Okay. Tricky thing with triangles, though, is that a lot of times you actually get a triangle within the triangle. Okay, that sometimes happens towards the end of it. In other words, you get really tightened up and the consolidation really kind of starts to frustrate. So, that could certainly happen here. The point is, though, is that both, the triangle idea points lower. Okay, and 97.55 continues to hold as resistance. So that's the high volume level. Again, there's the red line. You asked about this earlier. Red line, that's the red line. This was 97.55. The 812 reversal, that was a big volume area right there. Okay, that level's more or less been resistance actually the last 2 days. Okay, so I'd be looking lower in dollar Swiss here. I don't have anything to look at it on a short-term basis at this point. I'm sorry, but it's it's kind of sloppy, so I just don't have much to look at. But on an hourly chart, I will say, Sohaib, that dollar Swiss might be technically you could say that this thing has actually broken out of like a major trendline resistance. This goes back to 1985. Okay, so it's the magenta line. This is a weekly chart. So eventually there could very well be a big dollar bullish opportunity on this pair to sell Swiss francs. I don't know why that would happen. Who knows? Maybe the SNB comes in and does something else completely insane and sends it the other way. But if we're looking at action, here's the March high. So if this ends up coiling to a triangle and it could last a bit, a while longer, maybe we end up getting a big buying opportunity on support at some point down here. As it is right now, I don't have a whole lot to look at or trade or have no interest in trading dollar Swiss at the moment. Okay, that could very well change as the coming weeks and months clear up consolidation, right? Could end up, again, as I'm saying here, we could tighten up a little bit, get some back and forth, form a triangle, position us for some support here, a little lower, and then look to take this thing position for what could be a substantial breakout towards much, much, much higher levels at some point in the coming, year or something, right? But as it is right now, what you're probably interested in at the moment is, what's probably happening in the near term. And for me, looking at this as a context of a triangle, it's probably headed a little lower to complete what could be, this triangle. But again, wouldn't be surprised to see a triangle within this consolidation take place, in which case we get really tight. right? And the market would really tighten up. So that's bottom line to answer your question, probably looking a little lower in dollar Swiss, right? Okay, so we've looked at dollar stuff. Again, I think probably one of the more important charts to look at is just this dollar chart. This is hourly US dollar index. Draw these lines on there. Pitchfork, use this high, use this low, use the high up here. This is your resistance, the median line, upper parallel. If we head higher into FOMC, probably good sells in these levels. Okay, that's kind of what I'm thinking as far as dollar Swiss is concerned. Or sorry, dollar Swiss. As far as the U.S. dollar is concerned, U.S. dollar index, and this is your Aussie, and this is pound, euro, and yen. Finally, we haven't really looked at it today, but might as well take a look at dollar yen, of course. It's one of the better ones to look at typically with FOMC. And this thing is such a disaster right now that we should be looking for, an opportunity because this thing should clear up soon. So obviously the panic lows we got, again, on that long-term lower parallel, still holding. Obviously since then, tightened up. It's got all the earmarks, all the hallmarks of a triangle, but kind of be ready for whatever at this point. Resistance-wise, did publish this earlier on the Squawk stream. It's resistance, but selling dollar yen, it does kind of feel like holding a big beach ball underwater right now, doesn't it? It's not the easiest thing in the world, right? It doesn't just, you sell it and it goes down 10, 20 pips and then comes right back. So, again, might be one of those things where it's best to wait for this thing to clear up. If it wants to stop everyone out and take up, 120, 120 is the month open. If it wants to get back up into this region, fine. Then, maybe we have an opportunity to sell a little higher. Interestingly, you've got this area over here, and I don't know if it gets there, but you've got a huge confluence, and this would happen next week if we ended up getting all the way up into the 122.50 area. That would be like the big sell, okay? Because that would be your upper parallel and the underside of your very, very, very long-term. Let's just go way back here. Long-term median line, right? That would be the sell. So, and that wouldn't just be the sell for dollar yen. That would be the sell for yen crosses in general. Okay, but as it is near term, this is resistance. I'm not really comfortable selling it because again, it's not doing anything, right? Every time we come up into it, we pull back and then we come right back. So not all that enamored with a dollar yen position, long or short at this point. The euro's much cleaner at the moment and would much rather be looking on a pure dollar play to buy 12.55 than say sell dollar yen up here. But we'll keep an eye on it, obviously, and if it starts to clear up, great, and we'll have some good ammo around to do something. All right, so that's it for now. Raj saying, Jamie, if you already are holding positions, do you close out because of FOMC? I mean, not really. It's the position's not based on it, so. EuroCAD, not really, but I understand there could be spikes. You have to also understand, what you have at risk. So are you holding a position that if it goes 100 or 200 points against you, are you going to care about it? Or is it something where you're very well capitalized and you don't have that large of a exposure, right? So that might be something to consider, right? So, but again, I'm not in any dollar trades right now, though, either. I have some cross trades, right? So EuroCAD, for example. But, this FOMC thing is so overhyped right now. It's, the dollar's in a technical position to decline. That's the best I can do. Everyone hangs on every word that these idiots say over there, FOMC and whatever, that, they've been saying crap for years that, I don't know why anyone listens to them anymore, to be quite honest. if you were to pull out what their sound bites of their press conferences over the last six years, okay, then you would have thought that and you would know the future as far as what the economic numbers would say, what employment would say, then you'd say that by 2015 we'll be at 6%. All right. Well, we're still at, basically nothing. So why listen to them? I don't know. Listen to the market though. That's what we're going to do. And with the US dollar, follow this bad boy. Okay. That's what we'll look at. All right. Okay, so that's it. I know I didn't really get into Aussie or Kiwi today, and we do have some interesting stuff going on there, but there's plenty of time to look at these things, over in the posts and obviously. So we're getting into the big spot here. Aussie dollar, 8 days up in a row, first time in years. So, whatever. Big area for Aussie up here to 72, 15, 72.30. Still think that one more dip, maybe not to a new low, but a dip would be a buy for a bigger recovery to at least 74.40. Okay, but that's all written on the long-term page, so really not a whole lot of detail to go into there at the moment. All right, so take care. Good luck. Heading into tomorrow, and obviously I'll have a swing update for you here later tonight, and any adjustments to positions will be indicated in there as always, and I'll have this archived up too, so you can take a look at the archived webinar. Okay, so that's it. Take care, guys. Have a good rest of your day. All right, bye.